So SS 560 subsequent event. So basics, so no use. So meaning of subsequent event. Subsequent events are the events occurring between date of financial statement and the date of audit report. Okay, date of financial statement and date of audit report, and the facts that became known to the auditor after the date of audit report and had been known to the audit report at the date that may have caused auditor to amend the audit report. Okay, first one between financial statement and audit report, and next one facts that came to know after the audit report, and if you would have known it before, now you would have amended it. Simple. So types of subsequent events. The first one is those events that provides additional evidence in respect of condition that existed at the date of at the date of balance sheet and the effect of estimation made on the preparation of financial statement. The financial statement should have been adjusted for any change resulting from the use of evidence of subsequent event. Like debtors would have been existed, but later they became insolvent kind of thing. Okay, so those events which provide evidence to respect of conditions that did not exist in the date of balance sheet and arose subsequent to the audit, and the event should not result in the adjustment of the financial statement, and some of the elements would have been disclosed in the may not be misleading. Okay, for example, business sales and all. Objective of the auditor, it is important. Okay, so objective of the auditor is to obtain sufficient and appropriate audit evidence whether the events occurring between the balance sheet and financial statement and the date of audit report that require adjustment and disclosure in the financial statement are appropriately reflected in the financial statement. Okay, then respond appropriately to the facts that became known to the audit after the date of audit report and that had been known to audit that have made an amend and audit report at the date that have caused amend the audit report. Okay, audit procedure regarding the events occurring between date of financial statement and date of audit report. What are the audit procedures that he has to do that after financial statement before audit report? And he should obtain sufficient appropriate audit evidence that the all evidence occurring between the date of financial statement and the date of auditor's report that requires adjustment or disclosures in the financial statement have been identified and appropriate and reflected properly. Array, this one you have studied. Risk assessment with respect to subsequent event shall include. So auditor shall take into account the auditor's risk assessment, which include the following: obtain the understanding of procedure that management has established to ensure the subsequent events are identified, inquiring the management where appropriate TCW as to subsequent events have occurred, might have transaction, read the minutes of meeting and read the latest interim financial statement, obtain understanding of the procedures like how to ensure the management subsequent event has been identified, inquiring the management where appropriate TCW how the occurred might affect the financial statement, read the minutes of meeting of the board of directors and this one, and read the latest interim financial statement. Written representation shall obtain written representation that the all events subsequent events for which applicable requires adjustment and disclosure have been adjusted and disclosure. So meaning of date of financial statement, this is kind of important. This is an asymmetrical. Okay, so it reflects the date of audit report and the audited financial statement are made available to the third party. The date of financial statement generally depends upon the regulatory environment of the entity, and in some circumstances the date the financial statement are issued may be the date the financial statements are issued may be the date that they are filed to audit regulatory authority. Since the auditor financial statement cannot be issued with the auditor's report, the date of financial statement are issued must not be later than the auditor's report but also be at or later than the date of auditor's report provided to the entity. Then this they have already asked. Even this one, the second case, the facts name after the financial statement. That is first thing, there is no obligation, and however financial becomes auditor that it has been known to the auditor and he wants to amend. Then in case DDI, that is discuss the matter with management, determine whether the financial needs an amendment, inquire how management need to address. So if the management address, he has to he has to carry, review, extend and provide a new audit report, carry out the procedures necessary for the amendment, review the steps taken by the management to ensure that anyone receipt of the previously issued financial statement together, is informed of the situation and extent of the audit procedure of the date of auditor's report, and provide a new auditor's report, and they have to include it. So they have to include it in a UM para. The audit shall include a new amendment and UM para that referring to the note stating that more extensively discuss the reason for the amendment of previously issued and earlier report of provided notes. If there is no steps na, so does not take necessary step and received of and does not amend the statement needed, in that case audit shall notify the management and TCW. The auditor should seek and to prevent the future reliance of despite the such notification management does not take any necessary step, the audit shall take appropriate action to prevent the reliance. Okay, done. And then audit approach for reporting the subsequent event. So if otherwise now you have to go for broader approach, that is audit must update the procedure until new report date and issue the post approval of amended statement and reflect changes in that. So if LR permits amendment of FS like to subsequent only, in that case auditor focus on the specific statement of amendments. Auditor should amend reports with an additional date indicating that the auditor's procedures of subsequent data are restricted solely to the amendments of financial and related to notes and financial statement, or auditor shall need to issue a new updated report with OM para or OM para stating that the auditor's procedures on subsequent data are restricted solely to the amendment and describe relevant note to the financial statement. Done. Thank you. So SA 570 going concern. So basis for going concern is a fundamental assumption, fundamental accounting assumption. It is viewed as entity will continue its operation for the foreseeable future and there is no intention of liquidation or curtailing of operation. So it is prepared on the going financial statement are prepared on the going concern basis, and it assumes that like it will continue its operation till the foreseeable future, and unless it requires, there is no alternative objectives, and impact of assets and liability will discharge on the normal course of business, and liquidation basis when entity is not viewed as a going concern. SFS are prepared based on liquidation basis, and inventory may be written down, and assets are likely recorded with the price they'll fetch. Okay, this one important. Responsibility for assessment of entity's ability to continue as a going concern. So management is required to assess the entity's ability as a going concern. Okay, even if the financial reporting framework does not include explicit required to do so. Management assessment of continuous going consists of making a judgment at a particular point of time about the future outcomes, even conditions. So factors relevant for making this judgment of future outcomes or condition are three things. The first one, degree of uncertainty associated with events, and the size and complexity of the entity and the nature and the condition of the business, and the information available at the time which judgment is made. Three factors to be considered. First one, degree of uncertainty, size and complexity of the entity, and information available at the time of judgment is made. Responsibility of the auditor, it is also called as objective of the auditor. Okay, so auditor is responsible to obtain sufficient and appropriate audit evidence about the appropriateness of management use of going concern assumption, and he shall consider whether there is material uncertainty exists related to events and conditions that may cast significant doubt on entity's ability to continue as a going concern exist and report according to SA 570. So as per SA 200 the absence of any reference to going concern uncertainty is in audit report cannot be viewed as the guarantee to ability to continue as a going concern. Got it? Risk assessment procedures, related activities. So you should consider the events and conditions. The audit shall remain alert as to whether there are events and conditions that may cause significant doubt on the accounting ability to continue as a going concern. In doing so, auditor shall define whether the management has already performed preliminary assessment of an entities as a going concern, and if done, discuss with the management. If not done, and ask them what is the basis for using the going concern basis. So evaluate management assessment. The going concern shall evaluate all the information as known to the auditor included in the assessment, and if the assessment is going concern covers less than 12 months, now he has to request the management to extend the assessment to at least 12 months. Okay, then prior period management. So The knowledge and events beyond the period of the management that may cause significant doubt on it as a going concern. Prior period beyond management assessment मतलब management assessments management assessment से ज़्यादा period if it is there ना, so management has to like what, so the auditor has to inquire the management whether he has a knowledge beyond the condition beyond the period of management assessment that may cause significant doubt on the uh, ability to continue as a going concern. Okay, so additional audit procedure. So when against condition are identified that may cause significant doubt on the going concern, the audit shall perform this three in this 1 2 3 4 5 things. The management has not yet performed a assessment to to entities ability to continue as a going concern. In that case, request the management to make an assessment, evaluate management plans for future actions related to going concern, whether when the entity has prepared a cash flow statement, consider its reliability, underlying assumptions, and consider any additional facts or information that came to know since the date of management has made the assessment, and requesting written representation for the management or TCWG regarding the plans of future action, feasibility of this plans. First one, if they have not made any assessment, request management to do so, and if the management has any plans for future actions related to going concerns, tell that, and if they have prepared the cash flow, and at what basis, like why should we underline, what are the underlying assumptions, and if they have any additional facts or information that came during that came available since the assessment has been made, and the requesting written representation to TCWG regarding the future actions and plan. So what are the examples? First one, analyzing the cash flow statement, entities last interim dividend, debentures and loan, minutes of meeting, inquiring the legal personnel, and confirming the existence of legality and enforceability of actions, subsequent events, and reports of actions, and determining the plan. And examples not going to read. Auditor's conclusion, same thing bro. Auditor's conclusion going concern existence of material uncertainty. What is material uncertainty? Here it is there. So material uncertainty exists when the magnitude of potential impact, likelihood of likelihood of occurrence in such that the auditor's judgment appropriate disclosure, auditor's judgment appropriate disclosures of the nature and implication of uncertainty is necessary as per AFRF. He says that the magnitude of potential impact and the likelihood of occurrence is such that the auditor's judgment is appropriate regarding the disclosure of nature and implications of the uncertainty necessary as per AFRF. Okay, implications of as per audit report. So if they have used going concern basis, if it is not appropriate, in that case he has to give a adverse opinion. So if going concern basis is appropriate but the material uncertainty exists, in that case he has to adequately discuss the event and condition that cause significant doubt on the management plans and the management plans to deal with it, and disclose clearly that the material related to condition that may fast on the ongoing concern, it may be unable to realize its assets and discharges liabilities on a normal course. Okay, first you have to disclose correctly, and it has to clearly say that it is unable to realize the assets and discharge the liabilities on the normal course. Okay, adequate disclosure is made in the, and if this adequate disclosure is made, in that case is made in the fashion that auditor has to give unmodified, that means modified opinion or a clean opinion or modified opinion, and he shall include a separate section saying that material uncertainty related to going concern and draw attention of the users regarding this matter, and state that events and conditions indicate the material statement may exist and cast a significant doubt going concern and opinion is not modified. Okay, so adequate disclosure is not made. In that case, if not made, he has to express a qualified and adverse opinion, and in the basis of qualified adverse, he has to state that material going concern may exist, and he do not adequately disclose this matter. The financial statement do not adequately disclose this matter, and has adequate disclosure has been identified, has been made, but no material uncertainty exists. In that case, the auditor shall evaluate whether the view of requirement of applicable FRF, the provide disclosures, the financial statement provide adequate disclosure about these events or conditions, and management is unwilling to make the extent to its assessment. In that case, so the auditor shall consider the implications on the audit report. Done. Thank you. So SFO 50, evaluation of misstatement identified during the audit. So objective is to evaluate the effect of identified misstatement during the audit and effect of uncorrected misstatement on the, if any, on the financial statement. So definition of misstatement is simple difference between ACPD reported on the financial statement of entity and the ACPD that are required to be required for an item in accordance with the applicable FRS. Misstatement can arise due to fraud and error, and uncorrected misstatement are the misstatement that auditor has accumulated during the audit and has not been corrected. So requirement is simple one: accumulation of identified misstatement. The auditor has to accumulate misstatement identified during the audit other than those which are clearly trivial. Okay, so consideration of audit and misstatement as audit progress. The audit shall determine whether the overall audit strategy and the audit plan need to be revised after getting those after accumulating those misstatement. If the nature of identified misstatement and the circumstances of their occurrence indicate that the other misstatement may exist, that when the when aggregated misstatement accumulated during the audit could be material, and the aggregate of misstatement accumulated during the audit which approaches some materiality determined in 320. Okay, the first one, the nature of the identified misstatement and the circumstances indicate that there are other misstatement may exist, and the aggregate of misstatement accumulated approaches the materiality level according to 320. Okay, communication and correction process. So the auditor shall communicate on a timely basis the all misstatement accumulated during the audit with the appropriate level of management unless prohibited by law and regulations. Okay, so auditors will request the management to correct those misstatement. And if the auditor request management has been examined class of transaction, account balance or disclosures and corrected misstatement that were detected, the auditor shall perform audit procedures to determine whether the misstatements remain. And if the management refuses to correct some or all misstatement communicated by auditor, in that case audit shall obtain the understanding of the management for reasons for not making those correction, and shall take the understanding to account while evaluating the FS as a fee for material misstatement. Okay, evaluating the effect of uncorrected misstatement. So before evaluating the uncorrected misstatement, now the auditor shall reassess the materiality determined in accordance with SA 2020 and whether it remains appropriate in a context of entity's actual financial result. The auditor shall determine whether the uncorrected material misstatement are materially individual or aggregate, and in making such decision, the auditor shall consider these two things: the size and nature of the misstatement and the effect of UCM related to period. Okay, and communication with TCWG. Auditor shall communicate with uncorrected misstatement and the effect individual or aggregate that may have the opinion on the audit report unless prohibited by law. And the auditor shall identify the material misstatement, uncorrected material misstatement individual. Auditor shall request the management that uncorrected misstatement to be corrected, and shall also communicate the TCWG the effect of uncorrected misstatement related to prior audit and terms of transaction managers college of financial whole. And what are the written representation? Auditor shall request a representation from the management where appropriate TCW whether they believe the effects of uncorrected misstatement are immaterial because they are not corrected individual and aggregate. So the financial statement as a whole, a summary of such should be included in a written representation. What should be documented? The amount below which the misstatement would be clearly trivial. Okay, the misstatements accumulated during the audit, whether they have been corrected, and the auditor's conclusion as to whether uncorrected material misstatement are material, individual, or aggregate on the basis of that conclusion. So three things he has to document. First one, the amount below which the misstatement would be clearly trivial, and all material misstatement accumulated during the audit, whether they have been corrected, and the auditor's conclusion as to uncorrected material misstatement that are material and or in individual or in aggregate, and provide a basis for that conclusion. Done. So SFIIT written representation. So the meaning is the written representation is a written statement by management provided to the auditor to confirm certain matters or to support the audit evidence. Okay, so written representation in contract does not include financial statement, the assertion or the supporting books and records. Okay, so written representation as audit evidence, similar to response to inquiries. These are just written representation are just necessary audit evidence, and although written provide necessary audit evidence, they do not provide sufficient and appropriate audit evidence. Okay, in fact, the management has provided reliable written representation does not affect the nature, extent, and other audit evidence of the that auditor has obtained. Objective of the auditor, O, S and R. First one, to obtain written representative the management, and where applicable TCWG, that they believe they have fulfilled the responsibility of preparation and presentation of financial statement, and for the completeness of the information provided by the auditor, and to support the other audit evidence relevant for the financial statement or a specific assertion in the financial by means of written representation, and to respond appropriately to written representation provided or written representation requested by the auditor but not provided. For whom? So auditor shall request the representation from the management with appropriate responsibility for the financial statement and the knowledge of the matters concerned. So form of the written representation, it should be letter addressed to the auditor, and the law, if the law and regulation tells them to make the public statement, in that case that may not be included in the representation letter. So written representation of the management responsibility. So the first one is preparation of financial statement. Auditor must seek written representation from the management on the duty of responsibility for the preparation of financial statement accordance with applicable FRF, including where relevant the fair representation. Okay, in some cases management may include the representation with the qualifying language to the effect that representation were made best of their knowledge and beliefs. So is that okay? It is okay, and it is reasonable for the auditor to accept such wording, and it is satisfied that representation is made with are appropriate and the knowledge of the matters included in the representation. So even the auditor can ask the management to confirm the representation that were appropriate inquiries were made in informed decision making. So information provided and completeness of the transaction. The auditor shall request the manager to provide written representation that it has provided auditor with all the relevant information and access that were agreed in the terms of audit before itself, and all the transaction has been recorded and reflected in the financial statement. Then why written representation about the management responsibility is necessary? So obtaining audit evidence on management role in financial statement, and obtaining audit evidence on management role in financial statement preparation and transaction completeness requires management confirmation on fulfilling this responsibility. The reason for audit, we cannot rely on the audit evidence to judge the management's prepared financial statement and provide information as per their agreed and acknowledged responsibility. For example, auditor could not conclude that management has provided the audit with all the relevance information, and the terms of the audit were engaged without asking whether and receiving confirmation, and such has been provided. Auditor may also ask management to reconfirm its acknowledgement and understanding of those responsibilities in the written representation. So understanding the management is appropriate when in these four cases. First one, those who sign with the terms of the engagement on behalf of the entity is no longer relevant with responsibilities, and the terms of the audit engagement has been prepared in the previous year, and there is indication that the management has misunderstood the responsibility, and the last one is changes in circumstances make it appropriate to do so. In four cases, okay, who has signed this not there, and the terms has been done in previous year, indication they have misunderstood it, and the change in circumstances. Okay, additional written representation of audit has communicated all the deficiencies which management is aware. Written representation about specific assertion. So in addition, audit may consider request management for about the specific assertion to support and to understand that auditor has obtained from the other audit evidence and the management judgment or intent in specific assertion. So this consideration will be relevant while obtaining valuable judgment can be done. Like for example, entities past history checking, and reasons for choosing particular course of action, entities ability to pursue a specific course of action, and existence of lack of other information and obtained during the course of audit that may be inconsistent judgment or in it. Date and period covered in the written representation. So the written period should be near as practicable, but not after the date of audit report. Okay, the written representation shall be for all financial statement and the period referring to the audit report. And if situation may have the current management were not present, in that case refer to audit report. Such persons may assert they are not positioned in to provide some all function report because they were not in the place. In this fact, however, does not diminish the other persons responsible for the financial statement as a whole. According to requirement that cover the whole representation will still applies. Okay. Issues with WR. Okay, so in two cases you have to disclaim the opinion. First one, you have a doubt. First one, WR of written representation about the management responsibilities. Auditor concludes that there is a sufficient doubt about the integrity of the management with such of written representation about management responsibilities are not reliable. First, there is integrity and not reliable. In that case, you can disclaim. And second case, they have not provided about the management responsibility. Okay, and here they are provided, but you have a doubt in their integrity and they are not reliable. And in case here they have not provided itself. So other representation, if the auditor has concern about the completeness, competence, integrity, and ethical values and diligence of the management, he has to determine that the such concerns may have on reliability of information and audit evidence in general, and audit representations are inconsistent with the audit evidence, the auditor shall perform audit procedure and attempt to resolve the matter. Whether the risk assessment remains appropriate and is not advised to risk assessment, and determine the nature and assess risk. What? And they have not provided, discuss the matter with TCWG and evaluate the integrity of the management, evaluate the effect that may have reliability on the representation, it may be oral or written, and audit evidence is to take up appropriate action, including determining the possible effect on the opinion and report as per 705. What are the other representations? So other assets require auditor to require audit representation. In that case, you can request that is necessary one or more audit evidence that shall request with some written representation. Okay, so those are not included with like FS and assertion, those are not included with this. Okay, so this may includes about specific thing, but these are not included in the written representation. Matlab, he can ask it sideways. So first one is whether the selection and application of accounting principles are appropriate when the following matters have been recognized, measured, and presented and disclosed in accordance with FRF. So what are the following matters? 1, 2, 3, 4. The first one, plans and intention that may carrying valuation of classification of assets and liabilities. Liabilities both actual and contingents, title or control over the assets, and aspects of law and regulation that may have financial statement including non-compliance. Okay, we are done with 580. So essay 260, communication with TCWG. So this essay deals with audit responsibility to communicate with TCWG. Okay, what are the objectives of the auditor? To communicate clearly with the TCWG the responsibilities of the auditor, the plan, scope, and timing of the audit. Second one, to obtain from the TCWG the relevant information relevant to the audit, and to provide TCWG the timely observation that are significant and relevant to their responsibility to oversee the financial reporting process, and to promote effective two-way communication between auditor and TCWG. What are the objectives? Important one, to communicate clearly with the TCWG that the responsibility of the auditor and the planned scope and timing of the audit, then to obtain from the TCWG the relevant information for the audit, and to provide TCWG the timely observation so that that are relevant to the responsibility to oversee the financial reporting process, and to promote two-way communication between the auditor and the TCWG. What is the role of communication? So there must be two-way communication. The two-way communication is important existing. Basically now we are going to discuss the importance of two-way communication. So there must be two-way communication, and importance are constructive working relationship will be there to understanding the matters related to audit, and the relationship develop while maintaining the audit independence and the objectivity. The auditor shall obtain from the TCWG information relevant for the audit, and for example may assist the audit in understanding the entity and its environment and the sources of audit evidence in providing information about the specific transaction, and TCWG in fulfilling their responsibility to oversee the financial reporting process and thereby reducing the risk of misstatement low level. First one, constructive working relationship, like important is to develop a constructive working relationship and to understand the independence and objectivity. To the auditor shall obtain information from TCWG, and the auditors should fulfill the the TCWG should fulfill the responsibility to oversee the financial reporting process by reducing the risk of middle misstatement. Communication with whom shall determine appropriate person and entities governance structure with whom it should be communicated. Okay, matters to be communicated. So there are 1, 2, 3, 4 matters. First one is auditor's responsibility in relation with financial statement. This even auditor should communicate responsibility in relation to financial statement. The auditor is responsible for forming and expressing an opinion on the financial statement that is prepared by the management with the oversight of TCWG. The auditor financial does not relieve the management or TCW for their responsibilities. Okay, and the audit of FS does not relieve the planned scope and timing of audit. The audit shall communicate TCW the planned scope and timing of the audit, which includes communication about the significant risk identified by the audit. So what are the significant findings from the audit? The audit shall communicate with TCWG these 1, 2, 3, 4, 5, 6 things. So auditors view on significant qualitative aspects of the entity's accounting practices, including accounting policies, accounting estimates, and financial statement disclosures. The significant difficulties, if any, encountered is the significant matters arising during the audit that were discussed, and the written representation about audit. The auditor is requesting the circumstances that may affect the form and content of the audit report, and any other circumstances according to the auditor's professional judgment are relevant to the oversight of the financial reporting. What are the significant findings? The first one is qualitative aspects of the entity's accounting practices, including policies, estimates, and financial statement disclosures. Significant difficulties, if anything, encountered. Significant matters arising during the audit, and written representation requested by the auditor. Circumstances that may affect the form and content of the audit report, and any other significant matters arising during the audit that audit professional judgment he thinks it is relevant. Okay, communication of auditors independence in case of only listed companies. Okay, the statement that the engagement team and others in the firm are as appropriate the firm. First one is engagement team, the firm, and when applicable networking firm have complied with the relevant ethical requirement regarding the independence. First line statement saying that the engagement team and the others in the firm and the firm and even the network firm have complied with the ethical requirement of the independence. And there are two things they say. The first thing they say, we have identified and considered all the relationship that may have impact in the independence, including the impact on non-services and the related safeguard that have been applied to eliminate the identified threat to independence to reduce them to acceptably low level. So what is the communication process here? So there is 5 steps, you can say. The first one is establish the communication. So you have to establish the form, timing, and expected general content of communication. Next, forms of communication. It may like first it should be in a oral communication, and if not possible then you have to go for writing, and it would not if it like you have to go for oral communication. If it is not adequate, go for writing. And the written presentation shall not include the matters that arose during the course of need not include the matters that arise during the course of audit, and independence shall communicate in the writing that independence required with TCWG. And the timing, and it should be done on the timely basis, and adequacy of communication process. Okay, so there shall be two-way communication between the auditor and the adequate purpose of the audit. So if not possible, then he should evaluate the effect and if any auditor's assessment on the auditor's assessment of risk of material misstatement and the ability to obtain sufficient audit evidence, and shall take the appropriate action. Okay, done. And just document it as well. Shall communicated and shall include them in the documentation, and communicated, and the matters have been communicated in writing shall retain a copy of and communication as a part of audit documentation. Thank you. SA 265, communicating deficiencies in IC to TCWG and management. Okay, so auditor responsibility is clear, and deficiency they have asked, significance of deficiency they have asked, So examples of matters like what may determine the deficiency, whether a deficiency or combination of deficiency and control significant deficiency. First one is likelihood of deficiency leading to material misstatement in the financial statement, the susceptibility to loss or fraud to related asset or liability, the subjectivity and complexity of the determined estimated volume or fair value accounting, the financial statement amounting exposed to the deficiency, the volume of activity occurred, and the importance of control to the financial reporting process, and the cause and frequency of exceptions deterred as a result of deficiency in the control, and the interaction of the deficiency with the other deficiency. So there is 1 2 3 4 5 6 7 8 things. So the first one is likelihood of deficiency, second one is susceptibility of loss or fraud, third one is subjectivity and complexity of the estimated amounts, then the financial statement amount exposed to deficiencies, the volume of activities that has been occurred, and the importance of the control of the financial reporting process, the cause and the frequency of the exceptions, and the interaction of the deficiency with the other deficiencies. So what are the examples of indicators of significance? So what are the examples? So the absence of the risk assessment process, the ineffective risk entities risk so first one is absence, ineffective aspects of control environment, ineffective response, identified significant accounting risk, management's ability to oversee preparation of financial statement, management's detected by the procedures that were not prevented, detected and corrected by the entities. Simple. First one, absence of RAP, ineffective entities RAP, ineffective aspects of control environment, ineffective response to identified significant risk, management's ability to oversee the preparation of financial statement, and management's detected that they are not prevented. Management is by the audit, management is detected by the mismanagements detected by the auditors procedure that were not prevented, detected by the entity's internal control. Okay, communication of TCWG. So it shall be communicated with TCWG on a timely basis, and it should also be communicated with management on a timely basis. So in writing the significant deficiency in the control that auditors intends to communicate to TCWG unless it would be inappropriate to communicate directly to the management in the circumstances, and other deficiencies identified during the audit that have not been communicated, and the management or the other parties that auditors professional judgment are such sufficient importance to merit the management attention. So this one they have asked, so no need to study. Thank you.